For centuries, the path to prosperity was paved with stone, timber, and dirt. To own the land was to own the future. We envision the landlord, heavy keys in hand, marching across a physical domain. But look closer. The horizon of the 21st century has shifted. The soil remains, but the gates have changed. Today, a new species of investor is emerging, one who commands vast empires of property without ever laying a single brick or signing a deed of sale. This is the evolution of the silent owner. The traditional barrier to entry has always been a mountain of capital, a down payment, a mortgage, the relentless burden of maintenance. But in the modern economic ecosystem, these barriers are dissolving. We begin our journey in the most liquid of environments, the stock market. Here we find the REIT, the Real Estate Investment Trust. These are the titans of the skyline. Companies like Prologis, commanding the world's logistics, or American Tower, holding the invisible threads of our cellular networks. By purchasing a single share, an individual can own a piece of 1,000 buildings. Giants like Vanguard and BlackRock have democratized this space, offering ETFs, exchange-traded funds, that basket these trusts together. It is real estate at the click of a button. Pure, passive, liquid. But the landscape grows more complex as we move deeper into the digital thicket. Imagine a world where a skyscraper is sliced into 1,000,000 digital fragments. This is the frontier of tokenized real estate. Using the immutable ledger of the blockchain, ownership is no longer a stack of papers in a dusty basement. It is a digital token, accessible to anyone with a smartphone. Alongside this, we see the rise of the collective. Crowdfunding platforms, names like Fundrise and CrowdStreet, allow the many to pool their resources, funding massive apartment complexes or industrial hubs that were once the exclusive playground of the ultra-wealthy. Yet, there is a gate, a regulatory wall known as the accredited investor status. For many of the highest-yielding projects, the law demands a certain level of wealth before one is even allowed to enter the room. It is a point of fierce debate, a struggle between protection and opportunity. For those with more time than capital, the strategy shifts from passive holding to active hunting. Enter the wholesaler. They do not buy the house, they buy the right to buy the house. It is a game of contracts, securing a distressed property and assigning that contract to a buyer for a fee. It is the no money down dream popularized by figures like Brandon Turner. But this path is not without its thorns. Critics call it predatory, pointing to the pressure placed on vulnerable homeowners. In states like Illinois, the law has begun to tighten its grip, demanding licenses where once there was only hustle. And then there is the arbitrager. They do not own the walls, they simply rent the space within them. Rental arbitrage, the act of leasing a property long-term and re-renting it on platforms like Airbnb for a premium. It is a play on the spread, a way to capture the hospitality market without the liability of a 30-year mortgage. It is what Robert Kiyosaki might call using other people's property to generate your people's cash flow. But we must look at the climate in which these strategies live. The winds of the economy are changing. Rising interest rates have sent a chill through the market. When the cost of borrowing climbs, the margins for REITs and crowdfunding projects begin to shrink. The question echoing through the halls of finance is simple. Can these indirect methods compete with the safety of a high-yield bond? There is also the control gap. Unlike the traditional landlord, the REIT investor cannot pick up a hammer to increase the value of their asset. They are passengers on a ship piloted by others. We stand at a crossroads in the history of wealth. The old guard still clings to the physical deed, to the dirt beneath their fingernails. But the new guard, they see the world differently. They see data points. They see dividends. They see a diversified portfolio that spans continents without ever leaving their desk. Real estate investing without buying property is more than just a financial tactic. It is the democratization of the earth itself.
It is a realization that in the modern age, access is often more powerful than ownership. The keys to the kingdom no longer require a physical lock.